Hey all, welcome to ShareTreck. It's the 10th of May 2022, and I'm going to do a very quick video today about CRISPR Therapeutics earnings. So let's get started. Quick snapshot of what CRISPR reported. They reported EPS below expectations, and they reported revenue well below expectations. So overall, they took a big beating yesterday. But this is still a good company, and I'll explain the reasons why. Because we had to look at the management commentary to understand the quality of information that they're trying to communicate in order to decide whether it's a good or bad result. So in terms of qualitative information, what I have here is that they're on track to submit global regulatory findings for CTX001 in late 2022. So this is a confirmation of the fact that they are still on track. This is where they were previously in terms of their intentions or timeline. They have dosed more than 75 patients in trial to date. For CTX001, we found that out when we did the Vertex report earlier last week, and we already knew about those 75 patients, so it's not a surprise. They initiated 2 new phase 3 trials of CTX001 in pediatric patients with TDT and SCD, so sickle cell disease. That's again something we already knew, so there is nothing new in there. Enrollment and dosing continues in phase 1 clinical trial for VCTX210 for type 1 diabetes. We did a separate video where we drilled down into VCTX210, so there is no surprises out there. CTX110 on track with CTX120 trial results expected in 3 months. CTX120, I think, is the wholly owned CAR-T therapy, and we are going to get results in the first half, they said, so which means in the next 3 months we're going to have the results. That's a positive that I see here, and part of the cash burn that has gone in also has been allocated to all these multiple tracks. We should keep in mind that unlike many other CRISPR companies, CRISPR Therapeutics has got multiple candidates in their pipeline which are in clinical trials, and the fact that CRISPR has got the confidence to put the money in there and keep up the schedule shows the confidence level the management has in possibly getting approval for most of these candidates. So all in all, we should remember that CRISPR's burn was expected to increase, cash burn was expected to increase because they have multiple candidates in the pipeline in advanced stage. So this, in my opinion, is to be expected and nothing to be really scared about. There is no major news on VCTX210 or in vivo liver gene editing that we don't already know. So there is not much out there. So CTX001 seems to be the premier candidate which is heading forward, and also CTX120 are the two highlights that I can see from this particular report. In terms of other qualitative information, they got awarded for 2022 Facility of the Year, and this particular award has gone for the manufacturing facility in Massachusetts. This, I think, is a qualitatively important aspect when we are looking at a biotech company like CRISPR, because the quality of facility definitely determines the quality of research and the readings that they get, because there are many facilities where there is a lot of setbacks in the research because the quality of the facility in terms of their equipment and in terms of their processes and everything is not up to date, so mistakes do happen. So this is a kind of risk mitigation, the way I look at it when it comes to CRISPR Therapeutics, because they have a state-of-the-art manufacturing facility which has won award from the industry. So this is again a positive, and any money invested in this, if it leads to a bit of a cash burn, is a good application of the money, so I wouldn't be worried too much about it. Then we go into the financials. Cash position is down 158 million due to operating expenses and R&D. And R&D expenses was 118.2 million versus 70.6 million in Q1 2021. But if you look at the quality of items in the pipeline at this point of time and the collaborations, it's way superior to what was the case in Q1 2021. So the increase in expense was due to advancement of wholly owned immuno-oncology programs and expenses related to new US research and development headquarters. So these are really two good places to put the money in. Wholly owned immuno-oncology. If I was to go to the previous slide, and I can tell you CTX 120 and the award-winning manufacturing facility, those are the place where the money has been invested. It's a good investment of money, and if there's a cash burn out there, it's something positive. I would in fact be concerned if the company had not put money in those areas. This is the right place to put in the money at the right time. General and administrative expenses are up 3.5 million due to headcount increase. Again, if you want to have good quality people doing good quality research and have a good progress in your pipelines, you need to invest money in headcount as well. So I don't think that has been any waste of expenses out there. Collaborations expenses up 10 million over Q1 2021 due to VCTX 210 costs. As we know, VCTX 210 costs are split between CRISPR Therapeutics as well as and ViaCyte, and that's the reason why we have this 10 million expense out here in the balance sheet according to therapeutics management. So I think that this is part of keeping up with their commitments and progressing VCTX 210. I would have expected to have some information about VCTX 210 progress in the report. I'm not yet satisfied that I got enough information out there, but these were contractual obligations and they had to be done. So there it is. So in terms of financials, those are the numbers I have. And apart from that, I have revenue at 0.2 million for first quarter. This is a very low revenue number, and the net loss at 179.2 million, which is up by 66 million over Q1 2021. So these are the headline the financial numbers. Just to summarize my thoughts about CRISPR Therapeutics, I think that the way the financials have turned out was but to be expected because the existing contractual obligations as well as logically expected expenditures that would incur for all those candidates which are in the pipeline, at least 3 of them doing clinical trials and also the wholly owned CAR-T therapy. So all the money is going in the right place for the expenses. The overall market is jittery. There's a risk off environment overall, and also people are looking at the extreme amount of panic in the market. The market is highly volatile. This is the backdrop at which the results are coming in. So I would personally, my personal opinion is that CRISPR is still a great company. I don't think this quarterly result is anything out of character. This is something I would have expected from CRISPR Therapeutics. So I'm still bullish on CRISPR. Things are looking good in this company. They have enough cash in their balance sheet to continue towards their objective. So overall, I think this is a good earning, and CRISPR is highly beaten down. It's worth buying at this point of time, in my personal opinion. And as I always mention in my disclaimer, these are all my personal opinions. Please do your own due diligence before you invest in shares. Personally, I would look at starting to dollar cost average into CRISPR Therapeutics during this volatile period of consolidation that's likely to happen in the next 2 quarters. So with that, I would bring this presentation to an end. I hope you liked this, and please put a like if you did. And also, if you are not subscribed, please subscribe and be a part of our CRISPR community. Thanks and have a great day. Bye for now.